All right, guys, what's going on? This is Ryan, also known as Cantor and Clark, and just going to give a brief BlockRoots update. So if anyone follows me on Twitter, you'll likely see that I mentioned how I would not be looking to hold on to any shorts at this point or open up any shorts rather at this location for a few reasons. And you can see based on this chart, I have these two ranges, all right, bracketed out, all right. Multiple rotations within each of these ranges, all right, and we have right below us the value area high of this range, okay, so that should actually say value area high, okay, of the range from September 22nd to, or I believe, what was that, September 24th to October 22nd, okay, so the value area high, all right, that is where that this is the high of where 70% in the case of my settings, the trading volume took place for this structure. And we are right below, okay, of the previous rotation, or series of rotations, or slight range we had after this massive markup. We are right below the value area low of this structure. Okay, so we've found acceptance, okay, below this value area, which is if we are considering the whole auctioning process, and if we're considering, how we trade ranges and breakouts of ranges, we would consider, this acceptance. If it were the case that we did not have another major structural cluster right below where we currently are. So from the risk return standpoint, okay, or the optimal risk return profile of what we would consider a good swing trade, this is suboptimal, all right? And, just to keep everything in perspective, okay, after a massive move that we had since the beginning of 2019, there were plenty of corrections that we can expect, okay, regardless of what your long-term price targets and prospects are for Bitcoin. Okay, it's not just going to go straight up, and if it's going to go back down, it's not going to go straight down, all right? It's going to spend a lot of time chopping in between. Okay, but I am not, like I said, I'm not falling into the category of traders where I'm just saying, okay, this is going to completely reverse course now from the high, okay, and basically retrace the entire structure. Okay, we're not there yet, so there's no real need to get into that frame of mind, and I'd say that when you start seeing those calls for really the calls are very extrapolated in their distance, and we're talking about traders calling for 3-4K again. Keep that in mind as for what that might mean about their current positioning, okay, and that represents an emotional response where likely traders will be caught off sides, okay. So we saw that down here, all right, the funding got very negative, price was brought down to a point in which everyone was thought that we were going to fall off a cliff, okay. The market positions itself heavily negative. What do we see if we're looking at the profile, all right, that at these lows, there's brief acceptance, a ton of selling, all right, so the negative delta indicated there were much more aggressive sellers at this point than buyers, all right, but what happened? Price reversed. We had a majority of the volume opened up below this candle, and we squeezed all of those shorts and caught them off sides, all right, so the market moves when there's no new investors coming into the market. The market moves what seems like entirely on liquidations, right? Between you and I trading against each other, between who currently is in this market right now, all right? When new investors come in, when new traders come in, they're not looking at a chart or a support and resistance level. They're just hitting buy on a very simple interface on Coinbase or on their phone, and they're really not interested in what the psychological support is, or the psychological resistance is, or where the moving average is. They don't even know any of that yet, and that's when the chart doesn't matter. But right now, positioning really matters. So what I'm looking for is, again, a repeat of what we saw over here. This was a massive bullish move up, right? This type of retracement here, whether we're looking at it from a wick-to-wick standpoint, okay, we're looking at around the 618, or if we're looking at candle closes, which would have been around here, right? This is still not looking like the most negative outcome after a move up like this. Okay, people get too married to basically dogma and what is considered the let's say the prototypical setup. Okay, when really price can do a lot of things right in between. All right, it doesn't have to keep perfect structure. All right, if we pay attention to things like the ATR, for example, and the average true range of price, we could see that it's still moving within its normal average true range. It's not doing anything that's considered outside the norm of standard deviation, whereas this completely was. All right, so what I'm looking for right now, considering this relative location to this value area, if we are accepted into this value area, and when I say acceptance, I mean that if we auction into that area and we see that, volume very much supports the auction. So if we look at something like a volume cluster, for example, if we come down into this area again, and this is a weekly chart, if we come down into this area again and we see volume really increase, all right, and aggressive selling really start to pick up, then I would have a cause for some concern. I would say that would be concerning rather. But we don't have that yet, so there's no real need to try to talk about situations that we currently are not in. We have to recognize that they might potentially exist and set up for them, but no need to cross that bridge until we get there. So what I'm looking at right now, I'm looking at the same pattern repeat over here, okay? And keep in mind, this is not written in stone. This is a point in which this is easy to talk about right now because price is finding some level of rejection or support rather from this value area. Okay, as expected, if we're looking at a volume profile, this is a good support. All right, and I would look for, again, traders to be positioned short in anticipation of this major cluster breaking. Okay, and that is a major assumption to assume that this is going to completely just give way when you likely have plenty of dormant orders that are waiting, one at each slight lower than the next. Okay, I would expect that this might get front run in that case. So when the positioning is largely negative, when we look at something like, for example, funding, okay, premium, we see that we had a shift from being very long in regards to there being a decent sized premium between current price, okay. Funding was trending towards being more positive, this giving an indication that longs were starting to pile in, okay, and ultimately when traders pile into one direction over the other and price is still moving sideways, that is potential for them to be trapped offside. So what I'm looking for right now is, again, that to happen in the opposite direction as it has in previous periods where we have gunned it in the opposite direction shortly thereafter. Okay, so traders will position short, and then we will eventually pressure them. They'll need to rather close out all at once, and we get one of these large moves. Now, keep in mind how this works as well, right? Even if we, for example, have a trader that opens up a short right here, okay, they open up a short right here, price comes up slightly, all right. When they are pressured and they're essentially held to the fire at this point, okay, you're not going to see them likely, if we just think from a game theory perspective, from a psychological perspective, just think about human behavior. If it comes down and they've been pressured already, don't they want to remove themselves from that pressure? So we can expect that when price moves up to a degree and they are pressured and they're not liquidated, that as price actually moves down to this break-even point, that they will likely close out. Okay, they want to get out at that point, and that break-even close actually ends up fulfilling the next support test of this area. So we have to keep that in mind, that there is a potential for that to exist, okay, or rather to occur. So even a short that has to some degree been pressured and then corrected and still goes in their favor, they are likely to eventually close that position out if it immediately does not commit to their intended direction. So another thing that I talked about, okay, and I want to mention this as well, is when we look at certain repeats in data. Okay, so when we see, for example, that throughout these last 5 weeks, 1, 2, 3, 4, 5 in this beginning, okay, the delta has been increasingly negative with respect to the first few, in the beginning it was increasingly negative. We had a slight shift, and then now we've again increased in the direction of rather in favor of aggressive sellers. Okay, so the delta is the difference between aggressive buyers and aggressive sellers, and it's negative in this case. So it's showing there is a heavy amount of market selling, or aggressive selling rather. So remember, you can sell a market and buy a market in two different ways. You can buy a market by having someone sell it to you, or you can buy it by taking it. Okay, and the same can be said for selling a market. So these are people aggressively getting out of position. All right, and what we normally see is that there is some type of reversion to a mean. Okay, so we are moving on to our 5th period of negative delta, and you can see that pretty much as a theme previously, the max we've had before any type of reversion is, again, it's around 4 to 5. So just keep that in mind. There is typically a reversion to the mean in markets where after a period of prolonged selling, and especially after a period of prolonged selling when the market has not continued in the direction of the pressure, this is a sign to get out of the positions if you are dominant short, or if you are over positioned in a direction where price is not continuing to resolve. And that's because that is where the heavier hand is likely stepping in. So when we see something like this, for example, so we had a major candle up, but this still had a a large negative delta. Okay, when we look at the following price action, and the delta is increasingly negative for these weeks, but price is not really moving tremendously, right? So the high low of these ranges is under 1,000. Okay, the points of control are not that far in price difference. All right, meaning that this aggressive selling is not pushing price down tremendously. All right, this is again a case where when there is a reversion to the mean, all right, we'll likely have traders that are offsides in anticipation of placing larger swing trades where they'll have looser stops, okay, something more along the lines of a volatility stop, where this could potentially propel us, okay, to a new local high. So just keep this in mind. Again, this is just the type of analysis that we need to explore when we're looking at this information. Again, so we're going on to our 5th week in a row consecutively of negative delta. In the past, we've had some type of relief, right? So it just happens to be that all these are kind of lining up in an area where we could expect a relief not even knowing that piece of information. So we have that negative delta for the last 5 weeks, all right? So up until this point, okay, if I could get my drawing tool to work, so negative delta, negative delta, negative delta, negative delta, negative delta, all right? And we are moving now into an area that should provide, given a certain context and given structure, okay, should provide a decent amount of support. So that's that, guys. Okay, just trying to give you guys a little bit more insight into what goes on, all right, under the surface. Remember, price action is very important, but having an understanding of what actually goes on at the atomized or granular level is tremendously useful. Okay, so for example, when we saw that this occurred down here, or if you're looking at it at a bid-ask profile perspective, you see there's a ton of selling down here. All right, we had a large selling imbalance. Okay, you can see 70 million right there. 70 million contracts sold. Okay, hit the bid. All right, right below, and price reversed. Okay, a dominant portion of this actual volume took place, okay, at the bottom. So the point of control for this whole structure was at the bottom. Most of the volume took place down here. We had a squeeze. What I'd be looking for right now, again, would be a good amount of selling volume down here. All right, the funding to move negative, and price still to rather still to grind more or less than show any kind of immediate response to this selling pressure. So that would give me the confidence to say that this was a much more obvious long opportunity than anything else. Okay, remember, the long opportunities that are great are the ones that do not look like good long opportunities, and the same can be said for shorts. When everyone is on board with the same plan, all right, it is typically it is not favorable for the masses, right? The market doesn't favor the masses. Okay, typically the masses are the incorrect or the odd lots with regards to the the likely direction for price movement. So that's that, guys. All right, remember, value area highs right here. Okay, point of control of this structure is right here. We have these two decent support clusters that we should expect to, again, perform their duty, as well as the fact that we have that negative delta going on the 5th week in a row, and we could expect some type of reversion to the mean. All right, so this is me just imploring you to consider that if you are currently short and you have a very tight stop, that one, the potential for you to be liquidated is right there, your position to be wiped is right there, and two, that you are walking right into support. So don't get caught off sides. All right, stay alert. As always, exercise proper risk management and trade effectively. Signing out.